Hi everyone, hope you're well. Here on a Monday, I think we are ready to move higher. I love to say that because we have been in a pretty ugly, sustained, aggressive downtrend, but it was always going to break at the first sign of demand and when the marginal seller finishes off. It's just whether is this the uh, compression breakout to form a lower high before we come back down to the lows and lower. We won't ultimately know, but I'm going to put together the reasons why I think we are going to see a Bitcoin with an 80,000 ticker on it this week or maybe the week after. I think we're really aiming to bust through that short-term holder cost basis around to that 85,000 mark. Now, I'll lay it out for you here. So uh, it's all back to supply and demand. You can hear, funding this or sentiment that, cycle, that kind of stuff. But as we saw with the all-time high before the halving for the first time ever a couple of years ago, I think in this institutional era, anything is possible, and we have to expect the unexpected. And when the demand side completely overwhelms the supply side, so the sellers will be constant, they'll be coming in here. The OG whales were dumping, now they're starting to wean off. But the demand side, so think STRC, which is Strategy's preferred instrument, which they just continue to deploy billions of dollars at a clip to buy more Bitcoin. That is a huge inflow of demand. Here, it was 50% down from the highs. Now we're probably more 40, that type of region. But that is a new inflow of demand. Additionally, the ETFs now consistently say that the ETFs are now the core driving force for Bitcoin higher prices because of those institutional flows. Retail is largely not here. However, retail and larger offices, etc., are buying Bitcoin via these ETFs through these instruments. And we had the Morgan Stanley ETF come through as well, which are having some modest flows. It's not BlackRock-esque yet, but it's coming through and being consistent. But what is important here is we are no longer even seeing outflows. This is a really consistent run of inflows. There are outflows from specific instruments as individual investors decide to rebalance all that. However, the consistency of these inflows is now apparent and it is beginning to get bigger. So you're seeing, 200 million, 300 million. You're seeing these 11 and 14, that's fine. But these big ones are really important. 663 million, 238 million, 411 million, 358 million. And the outflows, you can just see they're ducking through there. But when you get this consistency of inflows, what happens? Well, they have to go buy the actual Bitcoin off the market once these flows come in. So this is all adding to the mix at this stage. And if we go over to some Capriol's charts, we can just see the demand that is kicking up from these ETF buyers. This will not give two shits about technical levels, short-term holder cost bases, 200-day moving averages. When enough buyers come in and overwhelm the supply and the sellers out there, we've seen Bitcoin have some serious supply shocks in the past after halvings when it was more technically the 4-year cycle when the miners had an outsized say on everything. When you get that massive inflow of buyers, it just moves higher. It doesn't matter. Technicals do not matter. They matter in a sense, of course. However, that short-term supply shock, when derivatives maybe aren't driving the price action, you're just seeing this just constant spot-driven demand. We can just move higher. And you know what? Derivatives can add to that, specifically when we see over here. And I know Reese and I in the mastermind group had a really great conversation about funding rates because the check on chain dashboard here is showing just an incredibly negative funding on an annualized basis. And my view is I love to look at this version, not just CoinGlass. And we do look there a few times. That is more on a near-term sense of the funding rates. Where's the very near term? Are we so imbalanced that there might be a supply, a cascade, a short squeeze or a long squeeze in the immediate short term? This here, though, and AI did a great job of summarizing the differences between annualized and the shorter term side, is annualized, and this is more important for investors, I think, just throwing it out there. Annualized is showing you where there's regime shifts or structural shifts in how the market is viewing things in terms of the betting. Is this going up or is it down? Now, the market right now is pinned heavily that this is going lower on a structural basis. Now, All great Bitcoin moves have begun when the consensus, the betting, the derivatives, all of it is heavily on the negative side, meaning people are paying a premium to have these positions open. And it's at a sustained structural ebb now. You can just see the red just flowing through at a really heavy premium. It's down. It was up to 12%, now it's about 9.6%. But what this does is creates rocket fuel for Bitcoin to move high. If the demand overpowers the sellers, and suddenly these people that are heavily short and paying this massive premium, they have to cover themselves. They have to buy spot Bitcoin to actually hedge their positions, or they get liquidated, or they pull their orders if we just keep climbing higher. What you don't actually want to see at a low like we're at now at 70,000 or down at 65 or 66, you do not want to see a market that is FOMOing in and in a positive funding regime, because that's where longs are paying a premium to be open. It tells you that the consensus of the broader institutional derivatives market is betting that Bitcoin's made a low and we're going higher. We actually want to think the opposite. We want people to be thinking this is going lower, the consensus is going lower, we want to keep a cap on price, we're just going to short this into oblivion, make easy money. That doesn't happen. Funding is a really great tool to just watch to see the structural regime shifts of is the market in a long bias or a short bias? And right now it's a short bias massively. And I just bing, 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 bing. This is like green lights for me when you're looking at a lot of the momentum indicators and where we are, I guess, in the cycle, but how much we've sold off and how we're actually holding up as well, which is, I think, fantastic. Now, this does not mean we can't go up to 80,000, 85, 90,000 and come back down to the 70,000 mark or 65,000. Absolutely not. This just tells us that where is the money in capital in the derivatives market positioned? Now, the short-term holder cost basis is falling lower, 78.9. We are so close to that. If we can get through that 79,000 mark and punch up through 80, things can accelerate quite quickly. And a lot of these short positions can add to the fuel of us pushing higher. And we can get higher than we think. But after that compression and a massive expansion, generally what happens is the market pulls back and really tries to fill the gap that the derivatives ran through. So I'm just being really conscious of that. I'll get to the chart in a sec, but this is really positive for me. I think we're in a really good position where the market still thinks that we're going lower while we're climbing higher. And that's kind of like the staircase up, disbelief mode. Now, I wanted to show you, so this is fantastic. As long as we're staying above the Bitcoin mind, you can just see the demand from treasuries, which is in the orange. You can see the green, which is the ETFs beginning to move higher as well. When these things are in a really high, heavy state, that's when we're just cruising higher. It just tells you that ETFs are coming in with a massive demand. How do we know that at a more nuanced level too? Well, we can go here to see the institutional buying on Coinbase. So a lot of the ETF, not a lot, all of the ETFs generally go through Coinbase Prime, Coinbase Custody. And we can see here that 27.17% of all Coinbase volume is now attributed to treasuries and also ETFs. So the other day when I looked, this was under 20%. Now, if we just go up to the here, relatively large values, 20% and above indicate significant spot demand for Bitcoin by institutions, while negative values suggest distribution. Right now, the demand is coming in really heavy, really fast, and we're seeing this launch of volumes going to the institutions. So the rest of that percentage on Coinbase is non-institutional clients, retail, people like you and me just buying maybe dollar cost averaging and adding to the mix and also maybe buying altcoins. But when you see these here, the ETFs predominantly Bitcoin, treasuries almost predominantly Bitcoin as well, all this volume is coming in by institutions. It's telling you there's a spike in demand coming in quite hard. So that's a really good spot to start on. If we go to Bitcoin here on the chart, let's have a little gander, and then I'll touch base on a few other things. So staying on the weekly time scale, bring up volumes look pretty low there actually, but let me go to, where's my RSI? Okay, so Bitcoin's just butting up against 50 on the RSI on the weekly. We've just had another weekly close out of, so what in essence, I thought to myself, right, we're going to know a lot about this market by today, by the weekly close on Monday, because generally when you see a breakout like this on a weekly or daily time frame, it can be a bit of a fake out, a bit of a tease, and you FOMO in maybe on Thursday or Friday. A lot of market participants do, and then by the time the US market closed on say Saturday morning, we see this contraction into Monday where everyone's focused in, and then the actual weekly candle will close back beneath a major resistance level, and suddenly people are trapped above. But that doesn't seem to be what's happening. The ETFs are really fueling this through levels higher. Now, the weekly close closed through the downtrend, which I've got on here. It's maintaining its position above the 10 EMA. It's maintaining its position above the 20. It didn't have any significant pullback at all. It rammed into the short-term holder cost basis at 79,000, came back down a little bit. That's fine. You're not going to bust through these levels, first time. But this here, this is a genuine break. Higher high, higher low. This to me looks like she's wanting to go to 85, 86, exactly in line with the yellow arrow here. And that's still my base case. Probability wise, I think it's probably 60%, 60, 70% that this yellow trajectory happens. I don't think we make new Bitcoin lows. That's just a gut feel. It's also how I'm positioned. I can also get out of some of that position. It doesn't matter. But this is my gut feel. Instead of making new lows, I think whatever we're going to do up here is going to take two trajectories. And whatever happens over the next few months, especially the sell and may and go away effect, I think we are going to have a bit of a move up to some degree, and then we're going to contract. We're going to have this compression, then expansion, exactly like we've done, previously. Compression, expansion, compression, expansion, expansion, compression, expansion. So very similar dynamics at play here, but we just have to monitor how the market behaves in the ETF era, and it is exactly how I've just described. So the ETFs, you sort of landed through this area and we're getting geared up, but compression, expansion, compression, expansion, compression, expansion. Where the compression can also be distribution. That's essentially exactly what it is. When we get to higher prices, traders, short-term investors take some profits off the table. OG whales come in, they sell a bit, and then the buyers regain control and we send higher. Right now, I just think the imbalance is so acute. How strongly we fell, how fast we fell. We got quite a way away from the short-term holder cost basis, or maybe a nice medium point in the market. Now we're having a bit of a mean reversion coming back. So I think at a minimum, 80,000 is really where Bitcoin wants to get around that short-term holder cost basis. The key is we want to build on that and go higher. And I want to point out too that like we made that all-time high before the halving for the first time, things may be different this time. People are expecting us to make lower lows or equal lows or whatever by September, but we didn't think we'd make a new all-time high when the ETFs came in now either. It caught everyone by surprise and really didn't give anyone, serious entries that they really wanted to, all the way up, and they were chasing. And I just want to make the point that I think what would be pretty poetic here is everyone's expecting this prolonged bear market that goes sideways and blah, 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 all that. But instead, we have this cracking breakout. It doesn't give anyone a breath to capture really good prices unless you are positioning that we're going to make a new all-time high this year. And I think we can absolutely do that. Again, if we just have more buyers than sellers, which it does appear like there is an appetite for that, then these things are possible. I need you to have maybe that probability in your mind that, okay, what if this year doesn't pan out like previous bear market cycles, just like the last few years haven't panned out like we thought to the upside either. We have to have these probabilities in our mind. Institutional flows operate differently. Okay, so we're following the yellow. What will happen here is we are going to probably have another thrust into the 80,000s, maybe 85, 84, but we find that we just can't breach this really strong volume block, the 100-week moving average, and we get rejected somewhere in this region, either low 80s or mid 80s, maybe higher, possibly. And then we just compress, we grind down, create some lower highs. Then everyone starts to think it's all over again. And the area you want to get really interested is actually when we come back down and retest the breakout. And I think this is a highly likely scenario, which would mean, buying anywhere between that 78,000 down to that 74, 73. But there's a bit of nuance that you can add to that. Again, staying onto the weekly, because I think it's hyper important. We have that higher time frame. The 10 EMA on the week, 10 EMA on the weekly rather, is a level that you can use to help you and me to layer some orders. So as this 10 EMA begins to snake up, and we've just had a close, the 10 EMA is now at 74. This will continue to move higher along with the 20, and you can move your orders up along with that 10. And then if you get a a weekly close beneath the 10, then you can look to risk manage. That's how I'm viewing it because the weekly 10 is a very core barometer in is Bitcoin uptrending. You can just see here back when we were uptrending to the highs with the ETFs, there was a bit of chop solidation here. But once we broke out and we had this thing, we were just riding the 10 all the way up, closed beneath it, but then got back above it, tap, 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 tap. But when we conclusively lost it and fell into this bear market phase, tap, tap, we could not reclaim it. Wick, wick, massive sell-off. Wick, wick, massive sell-off. It just kept going. But now we are closing above it. That's a really good sign. Same with the 100-day moving average as well, which we can have a look in a sec. Now, the opposite scenario to that, maybe not opposite, but similar to the scenario, but it takes into account what can happen in a really aggressive short squeeze through an area which people expect to be quite strong in terms of sell pressure. But when that can happen, just like when we're at 100,000, 98,000, when you do get some closes through an area and demand or supply picks up, you can rush through regions much faster than anyone expected, and resistance or support can get, just driven through like butter because of how heavily positioned one way or another the market is. Now, if that were to happen, then I would expect us to just rip raw through up above the 100-week moving average, 88, maybe land somewhere at 94. That would be a pretty epic weekly candle, which I would expect to get pretty heavily sold back into. And if it closed back beneath any of that stuff, then I'd expect the yellow to take over. But let's say we have a close above the 100-week moving average and the volume, then I would expect us to get rejected at about 96, 95,000. Where is it the 200-day moving average is, or just above? The 52-week is super, super, super important. When we're above it, we have always been in a bull market. When below it, we have always been in a bear market. So that's really my barometer, and that's moving down 95. It's coming closer to us. So it's going to be easier for Bitcoin to reclaim that level and give us a lot more confidence in the market. And I misspoke before. I think the 200-day moving average is around 85, 86. So this level is going to be, I think, really tough to crack, which could actually be the opposite as well, which everyone thinks is going to be tough to crack, and we just rip through it if demand's strong enough. But if we do get somewhere up here, I'd expect to find some resistance. It will slow down eventually. It always does. And then we're going to have a pretty vicious pullback, I think. Then we might try again. And you could substitute this high with maybe this here. We could keep coming lower and do this dip underneath, grab some liquidity. I think 85 to 80,000 is probably just being psychologically important as well. But here you can just wick, 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 wick. This level, should provide tremendous support. But then it's probably 81, 82, breakout area in line with maybe this dip. But ultimately, I'd say if you're looking at a chart pattern to watch, I think what I can see here is probable is, if we're going to make new highs, is inverse head and shoulders, this type of movement. And you can just see left shoulder, head, right shoulder, and then breakout up. That would be perfect for me. And you see the neckline breaking out about 96,000 in line with the 52-week moving average. That is almost when you look at charts, you're like, well, what structure would it need to build to break out? I think that is really plausible. I mean, or it could just continue higher, like the S&P 500 and go out of here. But there are different reasons people are buying the S&P versus Bitcoin, and it just operates different. Bitcoin's shown very little correlation to the S&P, so far this year. So just wanted to put that in mind. But Bitcoin's looking very interesting here, and these scenarios over the next few weeks are going to be very tantalizing. But I would say, as investors and masterminds who are watching this, is what's your current Bitcoin allocation? Where are you going to add more? What are your triggers to the upside or downside where you're managing risk or are going to add more as well? So where is also your floor of Bitcoin? Because again, I'll just reiterate that the best strategy that investors have employed over every single cycle, no matter institutions, all that kind of stuff, and even in real finance, when you're looking to acquire stuff, you just want to buy as much as you can on discounts versus being too cute and waiting for extra lows or getting greedy and hitting an area you really like, but then moving the goalpost because you're running with sentiment. I really think it's smart to have a floor allocation of Bitcoin that continues to grow. The lower price goes, the idea, ideally, is you want to be increasing your floor allocation, so your non-negotiable long-term hold, for all-time highs and the previous highs and higher. I don't want to be selling my Bitcoin under the old all-time high. It has just proven a very silly thing to do. buying low and then waiting for new highs is the more sensible approach, and you can get more nuanced with how you do that. But that's just my big picture strategy here is, guys, we need to be focused on not missing the forest for the trees and waiting for arbitrary levels here and there and just go, no, this is a great area of value. I think where this is going is much, much, much higher over the next few years. Then, we just need to be allocating positions. And yes, there's nuance into that, and we cover that obviously in the masterminds a ton, in terms of what levels you want to increase here and there. But if your allocation is really, really low, if non-existent, then I think you need to get very aggressive at looking at, how is this playing out? Is this working for me? Do I need to form positions? What's my floor allocation and where am I going to add it and when? As long as you're decisive with your plan, it's fine. But if you're just riding off the seat of your pants and you just think, no, I think Bitcoin's going to go to 40, 30,000, you don't really have a plan for allocation, then it's big trouble. Okay, let's move through. I think everything on Bitcoin's chart looks fine to me. Currently, S&P 500 moving higher. Now, I know I said Bitcoin has no real correlation currently to the S&P, but I would just say in any case, having an S&P moving higher is always friendly to Bitcoin. But Bitcoin can often do its own thing. But yeah, more risk appetite is really good for Bitcoin. Russell 2000 suggests that middle American economy is beginning to boom. And manufacturing sectors, all these little startups, they're getting a lot of love and they're breaking out here. So very much in line with the PMI, the manages the manufacturing index. When we get above 50, it's always a great sign for crypto and economy broadly, which is fascinating when we have 20% of the world's energy offline. There are now pivots to the US. They're now exporting a much greater amount, but we are going to see the lag begin to catch up over the next few months on how this affects semiconductor production, and so much of what we're seeing in the tech sector is going to feel the strain of scarcity and a lack of. So let's see how that plays out. But so far, markets don't give two shits. Bitcoin doesn't give two shits. Yeah, BTC feels like it's moving more into the scarcity bucket now and away from the software side, but we will see. Okay, gold continues to break down. Does look like it made that lower high here and wants to roll lower. And I'll just point out that gold, I think, is in a corrective phase. Is it going into a bear market? Maybe, but might do something similar to Bitcoin. It's up 300 something percent. It's a huge asset. It's up a lot in a while. I think gold, in my view, is a vital part of everyone's portfolio, just big sense, a percentage wise. However, is this the time to buy it? I'd wait for this to just play out and see where it goes, because I think Bitcoin's now having its turn, it's taking over. Same with silver. I think it's going to just continue to just meander along. But I think whatever happens here is a correction. Once that's over, and whether it gets down to that 4,000 or 4,200 area, I think it bottoms still in a larger correction. Let's just say something like this, and then it breaks out again. I see no reason why gold in this environment doesn't do it doesn't go on to go 6,000, 10,000 over the next year or so. It doesn't make any sense why it wouldn't. And same with silver being an industrial metal. But it's had its time. It needs to correct, needs to distribute, and we'll see from there. Bitcoin just looks like an absolute Monty against gold here. We've had the follow-through breakdown. Looks great. So this is just music to the ears of Bitcoin and crypto investors, is that right now, the fastest horse is now Bitcoin. We've been waiting for the rollover, waiting for gold to top out, and now Bitcoin might be taking over that mantle, which is great. A couple of charts that I've been watching as well. Look, Hyperliquid probably looks like one of the best still. I love this weekly close, the wick down, the close back above that core level. I was a hair breadth away from buying some hype this morning based on this close. I think it would be a great trade, but I zoom up over here to the Bitcoin pair charts, my guiding instrument. It's like, do I want to be parting with my Bitcoin for hype? And I look at this and I don't mind it. But then when I look at some other custom charts of hype to Bitcoin, it has closed beneath the horizontal. And that's the problem with you dealing with custom charts. It's very difficult to read sometimes when you're getting different mismatches of data. But so far, I mean, this compression above rather the all-time high of hype versus Bitcoin, and how the USD chart looks, it looks phenomenal. But it just comes back to personal preference. Do you want to be trading this environment? So I still think Bitcoin is going to be the leading horse and suck the oxygen from the altcoins. And I guess you can look at and I haven't looked at these charts for a very long time, but let's say total three. I mean, excluding Bitcoin, this compression looks like alts maybe want to begin to move soon, which is great, or it's compressing for the lower move to there. This here can break either way, but there's definitely compression. Could it be about to break higher in line with the rest of the space? Others doing a very similar compression too. I just think you can be pretty patient here. If we're going to see a massive crypto bull run this year on the back of the Bitcoin move, then we're going to have a lot of time to assess that. And I think waiting for breakouts, like say hype, if I go back to hype, where was it? Pretty sensible option here is I mean, you like, you like this here, and you still are taking a little bit of risk here. I think this runs to the 50 area, but a less risky option is to wait for it to break out of the all-time high with a lot of volume and gusto. I mean, that's the next real place that you want to look at. Now, another crypto, and I can't believe it, but I just want to show you. It's Pengu. Would you believe? I've got to stop drawing on charts. So if I go to is this the right chart? No, that's Pepe. Well, I mean, Pepe looks pretty good there. It was Pengu. Yeah, here. So Pengu, I've just been watching this core horizontal, and I might throw up. Oh, I do have volume there. Has it broken through with? Okay. Well, that looks bloody good. So volume increasing, weekly close strong through that horizontal. That's exactly what I want to see. Like everything you want to see. This is a trend reversal. It's just boom. Love it. You love to see it. You could wait another week for it to come back down, or if it just takes off, I mean, you feel like you've missed the chance, but so be it. There's going to be a lot of charts like this develop over time, so you are going to have opportunity. Don't think you're missing anything, but yeah, hype bit is a really interesting case of just staircase up. You could think here that it's building this rising wedge, but the rising wedges can also just break up when they're strong enough. So yeah, just something to think about. Now, also, so they're the only cryptos I'm really looking at here. Also, starting this week is Bitcoin Vegas. Now, I remember every single Bitcoin conference, and I reckon 9 out of 10 of them we see a pretty strong sell-off in Bitcoin, which is interesting. The flows currently suggest that's not going to be the case, but it tends to happen. But Bitcoin and crypto feel reasonably irrelevant right now, which may be, a few conferences where we had big sell-offs, we were just booming, we were just running. So it can sort of drive a halt. But look at the guests that are coming. I just want to put this on the radar. Michael Saylor, Jack Dorsey. Look at the array of institutional but governmental people that are here. Department of Justice, Acting Attorney General, the FBI Director, SEC Chairman, Paul Atkins, CFTC, Mike Selig, Chairman, David Bowe, Nakamoto, you can think what you want, Eric Trump, think what you want, Jack Mullers, Paul Ardino, head of Tether, Cynthia Lummis, Adam Back. This is pretty amazing in terms of how much government influential government people are going to be in attendance for this. There could be some interesting things that shake out during this conference. Trump himself might be there, but we'll see. I know there was another attempt on his life, so maybe he won't leave DC with sort of that hanging over his head. Maybe his son will carry some stuff. But there's always something interesting that shakes out of the conference, but never anything groundbreaking, apart from the El Salvador thing, which happened a long time ago. But yeah, just I wanted to point that out there, that don't think the US government's giving up on Bitcoin here. I think it's the exact opposite. We even saw optics this week was it the leader of the Pacific Fleet for the US? He testified before a committee in Congress, and he was saying how they're running a Bitcoin node, and it was really singing the praises of what Bitcoin represents and how seriously they're taking it for national security. I mean, again, this is just bubbling behind the scenes, but it's slower ebb, it's quieter. It's not like the mania that we've seen previously. And that's really the institutional side, isn't it? They just accumulate, they're quietly confident, they don't scream from the rooftops until their bags are full, and then they want to bring in everyone into the flow. But yeah, hopefully you enjoyed this video, guys. I think it's a really promising week in terms of price action. So let's see where we go with this. Yeah, I think it's exciting. Leave me any questions or comments below. I might share this to the other groups as well. Seems to be a pretty good session. So yeah, have a great day. See you soon. Bye-bye.